Hello, this is Brandon Christy from Christy Capital Management with an educational economic update for March 2020. In this month's video, we'll discuss some recent headlines that influenced the financial markets in February. I will also provide some perspective on what these developments may mean in the months ahead. Please stay tuned at the end of this video for a required disclosure statement. In your investing lifetime, you may only see a situation like the recent coronavirus a few times. The truth is that we can't yet gauge the full economic impact, and by the time we can, the market volatility may have passed. In February, the S&P lost 8.4%. The Dow Jones Industrial Average, which has heavily international exposure, fell 10.1%. The Nasdaq lost 6.4%. Demand for bonds was high, and that put pressure on bond yields. The 10-year Treasury yield ended the month at 1.1%, a record low. In response to the coronavirus, Federal Reserve Chairman Jerome Powell says that Fed officials are preparing to use our tools and act as appropriate to support the economy. Well, good news about the economy was overshadowed by the outbreak. Companies added 225,000 new hires in January, blowing past forecasts. Unemployment was just 3.6%. The number of people either working or looking for work hit a 7-year high. Retail sales were up 0.3% in January, and personal incomes grew 0.6%. Consumer confidence was strong. The Conference Board's index topped 130 for a second straight month in February. That hasn't happened since August. At the beginning of this year, consensus appeared to be that global economic growth would likely pick up thanks to the trade deal with China and early signs of a rebound in Europe. But the question now is, to what degree will the world's economies be slowed by the coronavirus outbreak? Investors are expected to watch economic reports out of China and Europe, as well as the initial estimate of first quarter gross domestic product due at the end of April. If reports show that COVID-19's impact was higher than imagined, stock prices may retreat. But if data suggests it was in line with expectations, stocks may respond more positively. That's it for our educational economic update for this month. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. You can give our office a call at 866-331-7749, and we will be happy to discuss your personal financial situation. Well, this is Brandon Christy with Christy Capital Management and your March 2020 Educational Economic Update.
While we believe this information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purpose or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. The modern design of the S&P 500 stock index was first launched in 1957. Performance prior to 1957 incorporates the performance of the predecessor index, the S&P 90.